Alright, masters, let's talk about something that sounds simple but can make or break your decision: relevance. When it comes to making business decisions like approving a budget, outsourcing a service, or launching a new project, not all costs and benefits are created equal. In fact, some are just noise. Enter the concept of relevant costs and benefits. In plain terms, these are the only costs and benefits that should matter in a decision because they affect the future and change depending on the choice you make. Let's break this down. Relevant costs have three important characteristics. Una, they must be future costs kasi tapos na ang nakaraan, wala na tayong magagawa doon. Pangalawa, they must vary depending on the decision you take. And finally, katlo, they must be tied to the objective of your business or organization. For example, let's say you're working in a government hospital and you're deciding whether to buy a new laboratory machine or just continue outsourcing those tests. The relevant cost here would include the future purchase cost of the machine, the maintenance expenses, and the savings from not paying external labs anymore. But here is what you shouldn't include. The money spent on the old machine 5 years ago, that's a sunk cost. Tapos na yon, bayad na. It's painful to ignore sometimes, lalo na kung malaki ang gastos before, but if it doesn't affect your future decision, it is irrelevant. Now, let's talk about opportunity cost. This is another key concept. It is what you are giving up when you choose one option over another. Parang love life lang. If you choose one, you say no to the other. Kung mag-leave ka to attend a conference, the opportunity cost is the work or outputs you could have finished if you stayed. So whether you're in private or public sector, whether you manage procurement, admin, HR, or operations, you will encounter these choices every day. And when you use the relevant cost approach, you are actually sharpening your focus to what actually matters for the decision at hand. Let's imagine this real-life scenario. You are the admin head in a government office. May offer ang isang supplier to repaint your office building. The team is split. Some say just use your in-house staff, but using your own staff means pulling them away from current maintenance tasks. You don't pay them extra, but the opportunity cost is the delay or lower quality of their other tasks. Meanwhile, if you outsource, you pay a fixed amount, but your current staff remains productive. So the question is, which option improves your outcome, considering relevant outlay and opportunity costs? Here's the catch. Many costs and benefits aren't easily measurable. How do you assign a value to employee morale or community goodwill? Sometimes these are the game changers. That's why your judgment and leadership matter. You don't look at numbers, you interpret them in context. And this is where the beauty of our two subjects, managerial economics and management accounting, comes in. Economics helps us see the broader trade-offs and opportunity costs, while accounting gives us internal clarity on measurable impacts. In essence, and again, managerial economics helps us ask the right questions, and management accounting helps us validate the answers with numbers. So don't think of this as just accounting or economics. Think of this as your toolkit for making smart, confident, and strategic decisions. Whether you're leading a team now or preparing to take on a bigger role, mastering relevant costs and benefits will help you avoid waste, justify your choices, and lead with more foresight. At the end of the day, remember, being a good manager is not about knowing everything. It is about knowing what to pay attention to.